Welcome to our weekly market review brought to you by ETM Analytics and TreasuryONE. As per usual, I'm joined by TreasuryONE's currency strategist, Andre Celia. Andre Celia, great morning this morning. We beat the All Blacks, so my coffee is a bit sweeter this morning than per usual, but a big week nonetheless. Two massive central bank decisions coming up. So we'll start with the first one, which is the Federal Reserve up on Wednesday. And, given the extent of the labor data revision that took place more than a week ago, it was quite significant. I think it was actually larger than revisions that happened during the '08 crisis, which begs a couple of other different questions, which is a story for another day. But because of the labor data that's really plunged, it's finally, I think, the COVID stimulus party, it's official, it's come to an end. Excess savings have been eliminated completely. There are a number of recession indicators showing us red flags. And this labor data is kind of like the last confirmation that the US economy is not doing all that well, and that we will most definitely get at least a 25 basis point cut from Jerome Powell and his team come this Wednesday, right?
Ilse Marie, good morning, and yes, a fantastic weekend. We're here. I mean, we all have been speaking about this possible cut for a long time. We've mentioned interest rates, we've mentioned inflation rates, we've mentioned that they've got two legs that they stand on, inflation and job creation or employment data on the Federal Reserve side. And now we're in the week where it's all happening, and it's not just happening with the US, it's happening with quite a few countries. So it's an important week in terms of currencies. We know that the figures over the last 2 weeks had pointed to weaker jobs data, figures that came out last week again towards the end of the week, once again reiterated that, and we've seen immediate movement on currencies. So now all that's left is the decision. Now, the decision, and the markets tell us, and if we look at the graph, this is really just what the market tells us, is we are seeing a cut. And the expectancy of a cut is 80 to 85% expected by the market. Now, 25 basis points is the one that's expected. The surprise would thus be either no cut or a 50 basis point cut. So the announcement would reveal which of those sides we are. If it's on the negative side that they're not cutting, we are definitely seeing a dollar back down to 116 or something against the euro. And if they have the 25 basis point cut, it's discounted. Then the people's going to wait to see what does Mr. Powell now say in his press conference about future rate cuts. If they cut by 50 basis points, my guess would be that we fairly quickly move towards the 117.80, 117.90 levels on the currency. But once again, people will wait and see what does Mr. Powell say. Then we'll see what all the other central banks does. Now, Europe, I don't think they cut. China, there's a possibility that they might do something. South Africa, we'll discuss that just now. But everything rides on Mr. Powell and his team this week. And the path of the dollar, weakening or strengthening, determines what will happen on the rand. But we'll talk about that just now.
Well, then, speaking about the rand, we know the SARB is also making its next decision to come this Thursday. A bit of a tricky situation for Kganyago as well. We know that the economy is under pressure. They've kind of set themselves a lower target, inflation target. Our labor market is weak, no matter which way you look at it, without revisions. But the currency is holding up quite nicely. So, what should they be doing, I think, is the question, as opposed to what we expect them to do. But obviously, we know markets anticipate that Kganyago, as per usual, will remain conservative, and he will likely keep interest rates where they are.
Okay, so let's look at what they should be doing, because that's what you asked me. What should they be doing? Economy, extremely weak. Bond markets, extremely strong. Inflow out of bond markets, very good. Interest rate differential, real interest rates, in other words, an interest rate differential between us and a lot of countries is really substantial. So attraction of the carry trade favors South Africa. So they should be cutting by 50 basis points. What will they be doing is another question. Mr. Kganyago, we know, is a firm and stern believer in an inflation rate target of 3%. And if you look at the inflation rate that came out the last time, it was slightly above the 3%. General expectancy that it could increase towards the end of the year. The positive one was that core inflation did not go above 3%. And in the words of Mr. Kganyago and the Reserve Bank, there's not much that monetary policy can do about the core inflation rate. So that we expect to actually remain fairly subdued. So there is room, if you look at the strength of the currency, the strength of bond markets, the inflow that came into the bond market and equity markets over the last couple of months, there is room for him to cut. But he's a very conservative person. There is still tariffs. There is the impact of those tariffs on the economy. Now, tariffs does not really make prices rise in South Africa. It increases unemployment and so forth, or the possibility of unemployment. So it actually increases the possibility of a slowdown further in the economy. There was a surprise, 0.8% in GDP. That might be positive for Mr. Kganyago and say, I don't really need to do anything. If you look at the strength of our currency, just the strength of our currency, and somehow over the years, that's the one thing that they also monitor. I would say I am giving it a 55 to 60% chance of him making a surprise announcement of a 25 basis point cut. I don't think that will be negative for the rand. I don't think anything will happen, and I think there's room for it. But 40 to 45%, nothing happens. And I know that there's a lot of people that differ with me today. I know that ETM Analytics differ with me on this one, but I think 55 to 60% chance that he is surprising us and actually cutting interest rates.
Yeah, that's an interesting call. It's definitely, I don't think it's ever off the cards, although I don't see Kganyago moving that way and his team moving that way, purely because there's so much uncertainty built into the system. You mentioned tariffs, but I'm also looking to China, for example, which is a massive trading partner, struggling to get going with their economic growth. We have, oil prices and what's happening in the Middle East. There's so much uncertainty that I think Kganyago will choose to play it safely. And I also believe that, monetary policy is not necessarily the one detracting from South Africa's growth. It is structural. So, but we can debate that on another day, and it's going to be interesting. But let's see who's right come Thursday. Of course, like you mentioned, the rand is having a good run. It's helped by the foreign influence into the local bond market. So I'm expecting that this is going to remain kind of the tune as we head into Thursday.
Yes. That's the wonderful thing about markets, is that we're allowed to disagree slightly with each other. And that's why we have directions into certain areas and movements and bids and offers. So that makes the market. But will a cut, an increase, or a no decision, no change decision really influence the rand falling out of this, call it 17, 25, 18 trading range? It's broken the 50. No, I don't think anything really changes too much on the strength of the currency, except a 50 basis point move and a jump to 18 could push the rand closer to the 17 levels. But that's an off chance.
So a lot on the table this week. Andre, we'll catch up again next week, Monday, to see who made the right call. And then we will take it from there. But thanks very much for your time and have a good week.
Thank you. Pleasure.